Today we are continuing with our lectures. That is, we are going to discuss about internal audits and outsourcing. Internal audit and outsourcing. And you know, this area too, always there is a question in this area. Because as an auditor, you either become a what? External auditor or an internal auditor. Now, according to Institute of Internal Auditors, internal auditing is an independent objective assurance and consulting activity designed to add value and improve an organization's operations. It helps an organization accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management and control and governance processes. So this is the definition given to us by Institute of Internal Auditors. As we continue, assurance services involve an objective examination of what? Evidence for the purpose of providing an independent assessment on risk management, control, governance processes for the organization. And as example may include financial performance, compliance, system security, and due diligence engagements. Consulting services involve advisory and related client service activities. The scope of consulting services is agreed with the clients and intended to add value and improve organizations' governance, risk management, and control processes without the internal auditor assuming management responsibility. That's very important. The internal auditor should not assume management responsibility. For example, it includes counseling, advice, facilitation, and training. Now, internal audit helps management. The reason why there is a development in internal audit, that's what we are going to learn now. Internal audit helps management to monitor the controls within their entity. At part 2, we were told that management put internal controls in place. And those internal controls need to work so that the company can achieve its objective. Because of this, they engage internal auditors to help them manage and to monitor the control within their entity. Now, similarly, as market becomes increasingly competitive, it is important that entities should be very competitive themselves. An internal audit function can be used to monitor the efficiency of what? Operations. An internal audit function can be used by management to check on compliance with laws and regulations. So what I just say is that internal auditors assist management. They help management to make sure that they check the compliance of all the what? Policies and procedures and relevant laws and regulations. Many entities use complex IT systems. Yes, it's true. Specialist internal auditors can help management to review the effectiveness of controls within IT systems. The increasing cost of what? The external auditor services means that it may be cheaper. It may be cheaper to use internal auditors to perform audit tasks whenever possible. Typical functions of internal audits. That's the functions of internal audits. The scope and objective of internal audits vary widely and depend on one, the state, the size, and the structure of the entity, the requirement of its management, So it means that internal auditor's job varies depending upon the nature of the work and the size of the work. So, however, internal audit activities usually include one or more of the following. So the following are the services provided by internal auditors. Monitoring of internal controls, 1. 2. Examination of what? Financial and operating information. 3. Review of economy, efficiency, and effectiveness of operations. So this means that they undertake what we call the 3 E's, or alternatively we call it what? Value for money audits. Value for money audits. Then the review of what? Compliance. Factors to consider in evaluating the internal audit function. If you want to evaluate the internal audit function, the following factors need to be considered. 1. The quality of the report produced. So if quality of report produced is very good, then it means you can rely on the internal auditor's job. So we used the quality of report produced in addition to the qualifications and experience of internal audit staff. Those who are performing the internal audit assignments need also to be what? Evaluated in the terms of what? Their qualification and experience. Then whether due professional care has been exercised. We, as one of our ethics, the professional ethics for auditors or for all the chartered accountants, the work should be performed with what? With due to what? Professional care and all due respect to what? Quality of work. The degree of independence of internal audit function. What is the degree of it? Now, that also determines whether the work is being done in accordance with relevant laws or standards. So, resources available is also another way. If you provide resources available, that means the work can be carried on satisfactorily. But where resources are not available, then it becomes very problematic. The scope of work performed. So in evaluating what? Internal audits or internal audit work, the quality of the report produced, the qualification experience of internal audit staff, whether due professional care has been exercised, the degree of independence of the internal audit function, that is internal audit department, resources available, and then scope of work performed. Now, comparison between what? External audits and internal audits. We have at the left hand side factor to consider. Then in the middle we have external audit function. Then as extreme right, we have internal audit function. So let's assume that you want to know the duties and responsibilities of both internal auditor and external auditor. Yeah. At this level, you have to know the difference between internal audit function and that of external audits. And I started by saying that duties and responsibility, as far as external auditors are concerned, is to express an opinion on the truth and fairness of the annual financial statements. As far as internal auditors are concerned, their function is to examine systems and controls and assess risks in order to make recommendations to management for improvements. Then, as far as qualifications are concerned, that of the external auditors are set by status. But that of internal auditors, there is no what? Statutory requirements. So it means management selects a suitable, competent person to do internal audits. When you come to mode of appointments, as far as external auditors are concerned, it's the shareholders who appoint what? External auditor. Whilst in the case of internal auditors, it's rather the management. Duties set by what? Status. The duties of the external auditor is settled by what? The status. And then, as far as internal auditors are concerned, it's set by who? Management. Reporting line, who do they report to? As far as external auditors are concerned, they report to shareholders, whilst that of internal auditors, they report to who? Management. Now let's look at the types of internal audit assignments that we do. Now, introduction. Internal auditors may be involved in what? Financial audits, focusing on the audit of what? Items in the income statement or statement of comprehensive income and what? Statement of financial position. Yes, they do that. So, internal auditors can also do what we call financial audits. The internal auditors are involved in other aspects of auditing, such as what? Energy audits. Energy audits. What is energy audit? These are checks on how the entity is making use of what? Energy and whether its operations are energy efficient. Then social audits are also part of the job done by internal auditors. These are checks on the impact of the entity on the society in which it operates. Then we also do environmental audit. These are checks on the effect the entity is having on what? Its natural environment and considers issues such as the use of suitable materials, recycling, reducing what? Pollution, etc. etc. We also, as far as internal auditors are concerned, they also do what we call human resource audits. And these human resource audits are audits into the workforce of what? Any entity to check whether the entity has adequate system for the recruitment, training, and development of what? Employees to meet its current and future what? Needs. As far as financial audits are concerned, that is performing financial audit is the traditional role of what? Internal auditors. Yes, that's the job mainly done by internal auditors, in addition to the external auditors. Then internal auditors may be asked by management to review accounting records and other records to substitute figures appearing in financial statements and management accounts. However, it is important to remember that by performing financial audit, the internal audit is able to look at the internal controls that are in place to minimize risks, to identify weaknesses, and to recommend improvements in the internal control system. Now, internal auditors also do what we call operational audits. What is operational audit therefore? Operational audits examine the entity's internal control procedures and whether or not the control systems that have been established by management are operating effectively. As a result of the audit, the internal audit department will make recommendations to management for improvements, yes, to the system or the way in which it is operated. They also do what we call value for money audit. That is the 3 E's. Value for money audit was described in our earlier chapter as an assurance service already that might be performed for a client by an external accountancy firm. Yeah, it's true. So value for money audits may be carried out instead by the internal audit department. Yes. One of the purposes of a value for money audit should be to check whether the most appropriate balance between what? Economy, efficiency, and effectiveness is being achieved. Compliance audit is another form of assignment executed by internal auditors. Internal audits can be used by management as a tool to confirm that significant laws and regulations are being what? Complied with by the company. The nature of important regulations vary from one industry to another. Controls over health and hygiene are important for the food manufacturing industry. Controls over money laundering are important for financial services, and controls over safety are important for companies in the public transport industry. Outsourcing. Now, as we all know, transactions can be outsourced. Where the transaction you think is not your core business, you can outsource your what? That part of the operation to outsider. So internal audits can also be outsourced. Now, what is outsourcing? Outsourcing by a company means arranging for an external entity to perform a task that will otherwise be performed by the company's own staff. So in this case, instead of your own staff doing the job, you give that portion of the work to what? Outside entity. It usually refers to routine and repetitive procedures and operations. Outsourcing of work to external suppliers and service organizations is a common practice. Example of what? Examples of work that can be outsourced. Payroll operations can be outsourced. Payroll operations. You can outsource your payroll. Then internal auditing can also be outsourced to other auditing firms. Financial and management accounting activities can also be outsourced. IT services, work related to taxation compliance and tax consultancy, due diligence procedure for acquisitions and mergers, non-financial services such as what? Catering, cleaning, motor vehicle fleet management, and staff recruitment and selection. All these services can be outsourced. So every good thing has what we call advantages, and there are some disadvantages as well. So there are several reasons why entities outsource their operations. Why should your company outsource some part of what? Their services? Cost saving. It saves what? Costs. Two, the skills of the external agency. Yes, the skill of the external service agency that is doing the job is high. So if you want to, let's assume that you want to establish your internal audit then you have to recruit. That recruitment too takes some time, the training of the staff and so many things. So it's better you go and outsource that. Then access to the most up-to-date techniques and technology might not be readily available within the entity, but the external agency may have them. That is the duty of the external agency. So they have what we call up-to-date techniques and the technology that might be used in executing those jobs efficiently and effectively. So it's better you outsource it to what? External agency. The management of the entity are able to focus their time and effort on core activities. What they are telling you is that if you outsource part of your services to outsiders, then the management will not have sufficient time to what? Depend on the core activities. And that means they will make sure that they utilize the later period for what? Executing essential or core activities. Now, anything that have good side also has bad sides. So there are also disadvantages as far as outsourcing is concerned. The management of the entity needs to make sure that the service provider understands the requirement of the entity in respect of what service that is provided. So it means that before you outsource, the one who you are going to outsource your service to, you must make sure that they can provide a good service. Then there may be problems with negotiating an appropriate fee for the what? Work with the service provider. Yes, that is also some. You have to provide what? A good negotiation. Then management need to ensure that service provider gives the organization an appropriate level of priority and customer care. So that is also another disadvantage. Now, outsourcing the internal audit function. Now, since we are talking about outsourcing in general, we are now coming to what? Outsourcing the internal audit function as far as the organization is concerned. Now, several factors need to be considered when an entity outsources any of its internal audit functions. So, in outsourcing your internal audit function, these factors need to be considered. The accounting firm must have a greater level of what? Independence than entity's own internal audit staff. So that is the function. Then the accounting firm may have access to more highly trained specialist employees. Yes. So before you look at that, it means that you must see to it that your accounting firm that you are going to outsource internal audit, they are going to have what? Highly trained specialist employees. Then the accounting firm will have greater number of what employees available for an agent internal audit assignment. Make sure they have personnel available. Then the professional codes of conduct and standard of behavior will regulate the accounting firm. This might not be the case with an in-house internal audit department. Then the accounting firm may be sued for breach of our contract or for negligent work and should have professional indemnity insurance to meet claims for losses due to negligence of work. However, there are a number of disadvantages with outsourcing the internal audit function to the external accounting firm. Yes, it's good that you outsource internal audit, but it also have a bad side, which are professional firms are not under the control of the entity in the same way as they are in-house internal audit. Yes, if you are using your in-house internal auditors, you have control over them. But in this case, you are rather outsourcing. Therefore, the external the external auditor or audit firm, you have no control over them. That is one of the loopholes. Then fees for internal audit work can be high. Yes, sometimes the audit firms charge high fees and it may be a disadvantage to the company. The professional firms may not have the same level of detailed knowledge of the entity and its operations that in-house internal auditors should have. So, they are from outside, they are independent, and therefore they may not understand the operation of the system very well. Then there may be threats to the independence of external audit, where the firm acts as both internal auditors and external auditors. Then one of the greatest disadvantages is that if you have given you outsource internal audit to your audit firm, the firm that audits your company, then conflict of interest is coming, or what we call self-review will be coming. So it is a disadvantage, it's a threat to independence. Outsourcing other finance or accounting functions. There are other accounting functions that need to be outsourced. An important aspect of outsourcing accounting functions may be that the external supplier controls the accounting record from which figures for the financial statement are obtained. So it means that you are opening your accounts to the public, where your in-house people are not working as internal auditors, because you are outsourcing all your transactions. So accounting records may be open to the public, to the other organization. Issue for the auditor to consider in this type of situation are as follows. So it means that as far as your audit firm is concerned, or your internal audit firm is concerned, you must consider materiality. The auditor should decide whether the outsourced operations material in terms of the financial statements. The second one is accessibility to the records. It is important that access to the relevant record is available for the auditor before you can do the job. And the auditor should discuss with the service organization the arrangements for obtaining the information required. Now, control risk. There is a risk which you call control risk. The auditor will need to assess control risk in the outsourced operation. A system audit will be possible only if the auditor is satisfied that familiar with the control system in the service organization. Compliance risk is also another, where the outsourced work is subject to regulatory requirements. The auditor need to consider how to gather evidence about compliance with the regulations. And then transfer of information is the third one here. It continued. It may also be necessary to check the procedures for the transfer of information between the service organization and the audit client to establish how information is transferred, how often it is transferred, whether the method of the transfer is reliable. ISA 402, audit consideration related to entities using service organization. That is what ISA 402 says. It says It provides guidance to external auditors where clients outsource some of their operations to service organizations. So where you outsource some of the services to what? Outsiders, then when the client uses the services of a service organization, the objectives of the auditor per ISA 402 are: one, to obtain an understanding of the nature and significance of those services. Then two, to design and perform audit procedures in response to the what? Assess risks. Now, how do you understand the services you are providing? That is obtaining an understanding of the services provided. In obtaining an understanding of the services provided by the auditor is applying ISA 515, which was discussed in our previous chapter anyway. But let's continue. The auditor is required to understand how his clients uses the services provided and evaluate the controls at his clients which relate to what? The services provided. Now, if the auditor is unable to obtain a sufficient understanding from the client, then he should use one or more of the following. One, obtain type 1 or type 2 reports. Then contact the service organization via the clients to obtain specific information. Then 3, to visit the service organization and perform appropriate procedures to give the necessary information. And 4, use another auditor to perform such procedures. What is type 1 and type 2 reports? We now know the previous paragraph says you should what? Go through the type 1 and type 2 reports. So type 1 report comprises a description of the service organization system, control activities, and controls as at specified date. So that is type 1. So the client owned, there's a description of the service organization's what? System. The service, assuming you use you engage what do you call it? Third party or outsider to provide let's say canteen services for your staff. Then it means that type 1 report is a description of the service since that organization what operates, and the controls activities and the controls at those places. That is type 1 report. Then a reasonable assurance report on the above description and the suitability of the controls to achieve a specific control objectives, prepared by an auditor instructed by the service organization. So a reasonable assurance from another service provider that will certify that the service being rendered by that service provider is in conformity with what? Relevant procedures. Now, a type 2 report is more detailed report covering not only the theoretical controls in place, but also whether in practice the controls have achieved their what? Objectives. So it is more detailed than the theoretical controls we discussed previously. The description may now cover a specified period and may also report on the operating effectiveness of the controls over that period. The report will now also give what? The service auditor's what? Opinion on the. So it means that still there will be opinion. Then the next one is what? A description and the results of his test of control. In common with earlier theory in this chapter, therefore, on relying on type 1, type 2, or type 2 report, the user auditor must be satisfied as to the service auditor's professional competence and independent from the service organization and the standards under which the report was issued. These are very important in the service rendered to what? Outsiders. Now, responding to assess risk of material misstatement, assuming that you have identified risks in your client's organization, how do you respond to it? The auditor is required to determine whether sufficient appropriate audit evidence is available from records held at the client, and if not, perform further audit procedures to obtain such evidence, or use another auditor to perform those procedures at the service organization on his behalf. If the auditor wishes to perform tests of control, that is a wish, he should use one or more of the following procedures. You want to perform tests of control. So one of the methods is 1, you obtain type 2 reports. 2, perform appropriate tests of controls at the service organization. Then 3, use another auditor to perform such procedures on his behalf. NAS International Standard on Assurance Engagement 3402 states that the objectives of the service auditor are to obtain reasonable assurance about whether, in all material respects, based on suitable criteria, the service organization's description of each system fairly presents the system as designed and implemented throughout the specified period, or in the case of a type 1 report, as at a specified date. 2, the controls related to the control objectives stated in the service organization's description of each system were suitably designed throughout the specified period. Then 3, where included in the scope of the engagement, the controls operated effectively to provide reasonable assurance that the control objectives stated in the service organization's description of each system were achieved throughout the specified period. And then to report on the matters in A above in accordance with service auditors findings. Service auditors findings. Now let's go to illustrative opinion for a type 1 report. So this is how type 1 reports will be. Our opinion has been formed on the basis of the matters outlined in this report. The criteria we use in forming an opinion are those described at page so and so. In our opinion, in all material respects, the description fairly presents the type, that's the type or name of the system as designed and implemented at a certain date, and the controls related to the control objectives stated in the description were suitably designed as at a certain date. So that is just a structure of the type 1 report. That's how it will look like. Now, opinion. Our opinion has been formed on the basis of the matters outlined in this report. The criteria we use in forming our opinion are those described at page so and so, that's above. The description fairly presents so and so system as designed and implemented throughout the period. And then the controls related to the controls objectives stated in the description were suitably designed throughout the period from this date to this date. And the controls tested, which were those necessary to provide reasonable assurance that the control objectives stated in the description were achieved, operated effectively throughout the period from such and so date. So this is the format of the type 1 report. Description of tests of control. Then you describe the tests of controls that you have done. Thank you very much.